Hey, it's Justin Harvey. Thanks for tuning into the Anesthesia and Pain Management Success podcast. With APM Success, we take a close look at important topics pertaining to business, practice management, personal finance, and careers for anesthesiologists and pain management physicians. We work hard to take your critical questions straight to the experts. Thanks for listening. Hello and welcome to another episode of APM Success. I'm here with my friend Brian Leet. Brian is an insurance expert. He's an MBA. He's worked with insurance carriers for over a decade and now has been on the client side, working with primarily physician clients for the last 13 years or so. I'm excited to have him here to talk about risk protection, specific insurance products, what are some pitfalls that doctors should look out for when insuring themselves, etc. Brian, welcome to the show.
Justin, thanks for having me. It's nice to be here. Appreciate it.
Always nice as well to talk to a fellow Oregonian, now that I guess I am one as a transplant. How long have you been in Oregon?
My whole life. It's this time of year, summer comes out. We definitely earn our summers here. Everything's green for a reason once you get through the rainy season, for sure.
That's right. Tell us a little bit about your professional journey and kind of where you're at right now and what your current operation looks like as a risk management expert.
Yeah, of course. So I think as you alluded to, I came into the industry having worked for an insurance carrier. Here in Portland, there's obviously not a booming insurance industry, but we do have one of the leading disability insurance companies based in downtown Portland, Standard Insurance. And so I started working there pretty much right out of college. It was one of those situations where I had gotten a degree in finance and in marketing, and a lot of the job opportunities that were presenting themselves right around that time were more correlated towards getting into selling products from a financial advisory perspective. And I got several job offers, but my perspective at that time, at least, was that didn't know that I was overly comfortable as a 21, 22-year-old asking families to turn over their finances to me. So I put in an application with Standard Insurance and I literally had to beg to get the job. And it was a very entry-level job, and the market at that time wasn't robust. And started working there in a job that candidly did not require a college degree. So I was issuing individual disability insurance policies, and that was back in the day when they were issued on paper. And it was fascinating for me because I was reading through applications on all these occupations that made income levels that I had never seen before. Probably pause and tell you that both my parents were public school teachers. And so I think it goes without saying that public school teachers probably aren't paid as much as some people think they ought to be. And so I got to read, what various occupations, including physicians, made on their applications. And I also knew how much they were spending on these policies. And so I kind of fell into it because I started reading the policies that they were buying, curious what it was they were spending all this money on, and worked my way into a sales role eventually and got into the competition side of things. So I got to memorize not just Standards policies, but in reality, the rest of the industry. And just as I progressed more and more, was on product development. And then I thought, like everybody else that was young and aspiring, I wanted to get into big management of an insurance company. And the higher I moved up the ladder, and I didn't move up that high because I wasn't in it for very long, the further I got removed from the things I enjoy doing, which is helping people. And so kind of a pivotal moment for me was the realization that my phone was the one that rang when somebody wanted to buy a policy, but they had just been diagnosed with something. And those are pretty memorable phone calls when somebody's in a moment of desperation and has just been told that they're not going to be able to work any longer because of a cancer or ALS or other diagnosis. And I kind of served as a wake-up call that not enough people are out there talking about these policies.
Yeah, I have a couple early experiences as a young 20-something that I can still remember like it was yesterday, those phone calls where you sort of have that window into not only people's real lives, but like sort of the traumatic, tragic, very difficult, emotionally heavy parts of people's lives. Do you have any of those conversations that stand out to you?
There was one in particular where I got a call from a wife whose husband had talked about needing to get disability insurance and didn't get around to it. and he had just been diagnosed with cancer, and it was an aggressive form that would have him out of work for a while, and it was going to be expensive to treat. And health insurance can take care of some of those aspects of the expenses, but for her, it was, he's not working any longer as the primary breadwinner. What do we have coming in that will serve as income to help keep, feed our family? They had a young family, had kids, they had a mortgage, they had a lot of the expenses that every day working adults have, but no mechanism to cover those expenses. And tragically, like a lot of insurances, you can't buy it after the diagnosis. You can't buy the auto insurance after the accident, kind of a situation.
Yeah, that's the catch-22 of insurance. Is it's
Yeah.
cheapest when you don't need it.
Yeah.
And statistically speaking, and I still, Brian, I don't know if you're into these people. I probably run into more of them just because I'm sort of closer to the big picture. You're a subject matter expert in terms of insurance, but I talk to people about insurance who would probably never even make it as far as you, and this is like a verbatim. I don't believe in insurance because insurance companies make a lot of money, and I don't want them to make money off of me. It doesn't seem like a good trade. And obviously, like, well, the best case scenario for you actually is that your life insurance expires worthless because that means that you didn't die. And it is a shifting of risk. You pay a certain fixed or at least concrete price. And in exchange for that, you get a certain benefit in the event of a catastrophe. But the benefit to you as the consumer is the locking in that fixed price. So if there's anybody out there who's like, I see, and you mentioned the Standard. I was actually walking downtown Portland the other day, and I saw, oh, that's the Standard building. Like, yeah, insurance companies. I mean, they do own some real estate downtown, so they're not nonprofits. Some of them are mutual companies, interestingly, but that's a separate discussion. But the point is, yeah, they make money because they offer this valuable product that is a useful risk transfer mechanism for individuals who want to protect themselves against certain catastrophic events.
Exactly. No, and I think it's fair for you mentioned the folks that don't find their way to me. I think it's fair for people to be skeptical of anything that they're being asked to buy. And I think part of what goes into the education of it is recognizing, to your point, that there is a shift of risk, and it's like packing for a trip. It's like I'd rather have it and not need it than need it and not have it. And so much of that is true with insurance. And I think the nice thing about it, at least from my perspective, is because I'm independent, I'm able to access essentially the marketplace. So there's not the components of competition definitely come into play with products like this so that they can be something that, isn't, I think there's an element of affordability with almost anything you buy, but making sure that, recognizing that if something were to happen, is this something I'm able to do on my own? Or would I need to get help from somewhere else? And in the event of a death or disability, it's candidly much easier to lean on an insurance policy than it is to go to Facebook and ask for fundraising dollars.
Yeah. Yikes. You're totally right.
Yeah.
Let's talk about disability insurance. And in particular, many of the listeners of this show, anesthesia and pain management. What types of circumstances do you see most commonly, and what are the unique considerations related to these specialties as it relates to disability insurance? What should our listeners know?
Yeah, well, I think in the scope of disability insurance, on average, physicians represent about 1 in every 300 Americans, give or take. And when it comes to disability insurance, physicians represent the absolute lion's share of premium that comes into the industry. And there's a whole host of reasons for that we'll get into in a second. So physicians represent almost about 50 cents of every dollar the industry receives, which is kind of mind-blowing given that they represent about 1 in every 300 individuals. Specific to anesthesiologists, pain management specialists, what makes them as a specialist category distinctly unique is the fact that they take on roles and risks that create scenarios that has them using the product more. I think one of the things we've talked about in the past is that a little fun fact is that for a lot of the insurance companies out there, anesthesiologists specifically are the #1 users of individual disability insurance when it comes to all occupations. They go on claim at a much higher rate than a lot of occupations, and there's a few reasons for that. One is obviously it's a high stress job. I think a lot of people don't fully recognize the role that motor skills play with anesthesiology and pain management. You think of needing to insert a needle into a very specific part of the body and insert a very exact and precise dosage of a medication, that requires a tremendous amount of skill that not everyone's cut out to do. And it doesn't take much to disable that occupation relative to maybe some other specialties that are out there, because of, again, the role that motor skills play. You get into, there's products for all these occupations, but you get into occupations like family medicine or pediatrics or radiology. And a lot of that is much more cognitive-based knowledge than motor skills relative to emergency medicine, anesthesiology, OBGYN, things like that.
We're coming up on the end of the academic year here. So in terms of thinking about coverage and thinking about the timing of coverage, particularly for physicians who are in transition, what kinds of things should folks be aware of?
That's a really timely question, Justin. There's been a lot going on in the industry in that respect. So in terms of things to be thoughtful of, when it comes to, and this is a common question that I get, is when should I buy disability insurance? And not trying to sound cliche, but by and large, and going back to what you said earlier, you want to buy it when you're healthiest. And for most people, that's sooner than later. Specific to those that are completing residency or fellowship, there's some advantages in buying policies either as you're still in training or coming out of it that aren't necessarily available to the rest of the population. So specifically, if you are coming out of training, most of the insurance companies offer some form of a discount that you can get on your policy that you can't otherwise get. And that discount can range, depending on the carrier, from anywhere from 10% to 20% and sometimes even more. And for those that are hearing this just after they completed training, maybe they're hearing this in July or August or whenever, the good news is that you can get this discount for a period of time after. Some companies actually let you go as far as 6 months after your last date of training to get access to these discounts. And obviously, if we start talking about like a 20% discount on a policy like this, that's a permanent discount. So that stays on the policy, and that translates into thousands upon thousands of dollars of savings. So I think, a lot of people are at a place where they're just coming out of maybe not making that much money while they're in residency or fellowship. They're maybe on the precipice of their first paycheck. And it's oftentimes like, I just want to wait a little bit till I spend that money on premium. And that's certainly their prerogative, but they may be missing out on the discounts and the savings that they couldn't get a year from now.
For docs who I see implement this successfully, I typically see like tens of thousands of savings cumulatively. If you sort of take I bought the sort of the basic coverage I could get as a resident, maybe it's $5,000 or $6,000 a month. And then I became an attending and I scaled that up to $15,000, $18,000. And that discount applies across the whole new coverage benefit. That 20% becomes a big number. 20% discount times all the years between age 32 and age 59, like that's some real money.
Well, and kind of the way I joke around it sometimes, especially if somebody's coming right out of residency and they're in the early stages of family planning, if they just had that child there, by the time that child is old enough to be at an age where they can buy the car, the cumulative savings they realized pays for the car.
Yeah.
I mean, and depending on the car, it could be a very nice car. So,
yeah.
And then the other thing that carriers have recently announced, and some of this is as recent as yesterday, is the amount of benefit that they're willing to offer somebody in training. That number has shifted. And I think there's collective recognition that physicians in and of themselves as an occupation, there's the need to protect more. Benefits are going up. Less employers are providing coverage. So like we have a carrier that if you're in fellowship or even in your last year of residency, you can get a policy that would pay you up to $8,000 per month. A month ago, most of the carriers were at $5,000 per month. So that's a pretty sizable shift in allowing young doctors to get more coverage when they are younger, when it's cheaper, because premiums for disability insurance are based on your age. And so if you can buy more coverage at a lower cost over time, that's going to save you.
Does that mean there's a commensurate increase to the cap? Is there similarly like a 3x cap, for example, on that $8,000 policy?
Yes-ish. So this is maybe the biggest shift I've seen in probably the last 10 years within the industry. So not too long ago, if we were working with a resident, let's say anesthesiologist, we know that anesthesiologists, relative to other physician specialties, pain management as well, earn more. Anesthesiologists earn more than family practice. And so not all that long ago, if our objective was to get somebody the possibility of getting as much coverage as they could on themselves, we would split. we would buy coverage from two companies. And the reason for that is that each company had their threshold of how much benefit they would cap somebody at. And for a number of years, that was $10,000 per company, $10,000 per month per company. And then that number shifted to $15,000. And then in the last couple of years, that number is now effectively doubled to $30,000. So a physician buying a policy on him or herself from a single company can get a cumulative total benefit of about $30,000 per month, which is a very sizable benefit, especially when we talk about it, like individual disability, which for most folks, you want to pay for that using personal dollars. And the reason for that is if you ever became disabled, those benefits would come to you tax-free. So $30,000 per month tax-free with the possibility of having benefits paid till you're in your late 60s or even 70 adds up to a very large number in terms of income replacement.
I always tell people, especially as a young physician, if your early career, and I would say like anytime in your 30s, the most valuable asset you have is your ability to make $350, $400, $500, $600, $800,000 a year times a couple decades. 800 grand times 20 is 16 million. I think I don't like doing math in public on the fly. I think that's the number. That's the cumulative earnings that is an asset to you, dear doctor, that is as yet unrealized. And that's worth more than your house. That's worth more than your car. Do you have home insurance? Do you have auto insurance? Do you robustly protect yourself across those facets of exposure? You should. Your income is exponentially more important, in my humble opinion, than even these more sort of commonly considered exposures. And so I'm always a proponent of for as long as you have a meaningful need of your income, and you can readdress this when you're approaching financial independence, meaning you don't need to work for the money anymore because you've built up meaningful portfolio and other assets that are going to pay your lifestyle. Before you get there, get the most disability income insurance you can, just because of how valuable that income is and because of all the important life realities that you have depending on your continuing to earn that level of income.
You are spot on.
I'm sure I'm preaching to the choir on this one.
No, but it's poignant because I get asked all the time, and we can have the same conversation when it comes to life insurance, but specific to disability insurance, a question that I commonly get is, do I need it? And I don't have the crystal ball to know whether or not somebody's going to become disabled or not, but I sure as heck not want to fall on the wrong side of that decision if they just opted not to get it and did. But in terms of, does it make sense for my financial plan? Maybe that's a different way to position the question. Instead of, do I need it? Does my financial plan need it? And kind of from my perspective, the way I look at it is, are you working when you go up and you get ready in the morning or whenever you get ready and you go to work? Are you going to work that day because you want to or because you have to? And if somebody is looking themselves say, hey, I'm going to work today because I have to, that tells me that their income is so critical to their financial plan. And so it's worth, putting away, and we can talk a little bit about how much disability insurance costs if you'd like, but it makes sense to provide that level of coverage so that the balance of your financial plan is protected. It falls apart if you don't go to work, if you're telling yourself you have to go to work today. The moment somebody says, I get to go to work today, then we can have a conversation, which I have all the time. And those are fun ones to have. I'm sure as a planner, there's nothing better than telling somebody, okay, you can retire. You did what you needed to do. Same's true in my world. These are great products to never use. I pay my premiums annually, and it's my annual reminder that I get to go to work.
Yeah.
If I didn't pay my premiums, it's either because I'm retired, which hopefully someday will happen, or it means that I'm on claim and I don't have to pay my premiums because you get your premiums waived when you're disabled. But I also have this weird perspective, having worked for an insurance company, that when my bill comes and I pay it, yes, my premiums are going to drive some element of profit to an insurance company. But ultimately, I know definitively that my premiums are going to help pay the benefit to somebody who fell on the wrong side of a diagnosis. And it's tremendously powerful to recognize, gosh, I didn't need it, but I'm helping somebody who did.
One important area of planning is assessing the insurability of a person. One of the reasons that I am a fan of getting coverage early is because you just mathematically, statistically, actuarially, there's less wrong with you when you're 32 than when you're 42 or 52. And so considering this as frankly, as a trainee, resident fellow, that's ideal timing. Talk a little bit about sort of how you would coach someone through that process, and specifically what happens if there is a medical diagnosis or an event, or there's some underwriting challenges and you're helping someone address that. What kind of options would they have?
If somebody's, and this is very common, so it's not, if I'm working with an advisor or if I'm fortunate enough to work directly with one of their clients, one of the very first things I do, and I fully call it out, I'm like, we met 5 minutes ago, but this is a product that ensures your income against changes in your health. So it's really good for us to level set and figure out what's going on with your health. And so I even had a call like that this morning with he's in his last year of residency, doing family medicine. And I said, we just met, but I need to know what's going on with your health. And I kind of let people from there, and physicians are really good at this, maybe more so than others, of just sharing what's going on with their health. And I encourage them, don't feel like if you think something's too small, don't feel like you can't share that with me. It's important just to put it all out on the carpet. And if they're still in training and I hear enough, my initial thought is, are they at a program? And I usually know this before the call. Are they at a program that has access to guarantee issue coverage? Can they buy a policy without the insurance company finding out the same thing about their health that you just shared with me? Because more and more carriers are opening up programs at various residency, programs that allow people to do just that. This particular individual is at a smaller program, did not have access to a guarantee issue program. So he needs to go through underwriting. But the perspective I have is I don't want to submit an application and handpick the carrier without first getting a sense of what the carrier's reaction is going to be to seeing that application. So with this individual, we took a very comprehensive list of everything that was going on health-wise, and I want to be sensitive to privacy, but there was issues with sleep apnea, there was issues with migraine headaches, there's issues with mental health. In other words, he's a human being. Like it's rare that somebody gets asked to tell them about their health history and they say, I've got nothing going on. That's just not how we're built. And to your point earlier, it's counterintuitive to buy a policy like this when you're healthy. You don't take a car that doesn't have problems to the mechanic. And so for those that are healthy and have no health history, this is my endorsement. Get disability insurance as much as you can now because you're a rare form. But what I did with this individual's information is I took a narrative of everything that he shared with me, and I sent an anonymous pre-screen. So I did not put his name on an email. I used his initials so I can keep track of it. And I sent, it to Emeritus, to Guardian, to Principal, to Standard, to Mass Mutual, so that I could then get responses back. And depending on which carrier gives me the most favorable response, we can then use that as an opportunity for him to submit an application through that carrier.
Having an insurance expert with a consultative approach, the way that Brian just described, the importance of that really can't be overstated. And I've been privy to a number of cases where you get, we'll call them insurance salespeople, not really true advisors, but just people who are trying to put as many widgets on the conveyor belt as possible, who, they take your information and they shove it into underwriting, and lo and behold, there's a disadvantageous diagnosis that in some cases could have been foreseen and worked around. It's particularly painful in the case of where there is a guaranteed standard issue option that was not meaningfully considered. And then what you're stuck with as a doctor seeking insurance is suboptimal. You've got carve-outs and exclusions, you've got higher premiums, or you might not be able to be insured at all. And in some cases, that's totally avoidable if you're working with someone who is thinking about the big picture. So I think if I could say one thing to the audience here is ensure that you're working with an insurance expert with a consultative approach. And Brian is one of those people. He's not the only one that I know, but he is an expert on this show who gets it and who understands and who is able to help preempt some of these challenges. Brian, I'm sure you've seen those cases where, somebody comes to you and they have like their sob story of, I went to, the guy down the street and he didn't give the care that perhaps you would have paid in that circumstance.
I respect anyone brave enough to get into this industry, so I want to be careful. And I work with a lot of advisors. I think going back to my roots, I think being the son of two teachers really plays. It's one of the things I love most about this job is that this is effectively my classroom, and so this is an opportunity for me to teach whoever the audience is that that no matter what you do, if you can walk into a conversation and the person you interacted with is better off having had it, even if they didn't ultimately buy something from you, there's satisfaction in that. And like, so specific to the example of the individual I talked to this morning, one thing I learned, he's in his last year of residency, he's going to work for a group. And I asked him if they offer disability insurance at his employer, and he said, I don't know. I quickly Googled it, and they listed as one of the benefits. So I said, and this is maybe a good segue of people who go to work for employers that offer it. I go, here's what I'd like you to do. I'm going to do my homework. I'll go pre-screen things. I'd like you to reach out to your future employer and ask them to provide you with a quick summary of what disability insurance looks like through them. Because no matter whether you decide to sign up or not for coverage, this will be a line of defense you're going to have when you're working there. So it's important for you to know how good or bad it is. Is that something that I get compensated on? Absolutely not. But if I take care of him and the advisor that sent him my way, he's got classmates that recognize that there's somebody here who's looking out for their best interest rather than their own individual ones. Which, can we segue to coverage people get through work?
Yeah, let's do it. That's a perfect connection.
Okay, so super common for people when even determining, and this is not just consumers, but advisors alike. I work with a lot of advisors that go through what's called a fact finder, and it's just them gathering information on the folks that they're meeting with so that they can essentially take inventory. What do they have in terms of assets, liabilities, and one of the things that comes up are benefits they have through work, whether it's health insurance, life insurance, and disability insurance. And I think a lot of advisors that I've worked with in the past will get to the point of the question where it says disability insurance, and the person says, oh yeah, I have it through work. And I think a lot of advisors check the box and they move on to the next category. Whereas I think the learned advisor, really the one who's more consultative, really should pause and say, okay, that's awesome that your employer provides it to you. What do you know about it? And the reality is most consumers at that point would say, I don't know anything about it. And they don't. And one of the things I encourage individuals and producers alike to dive into is let's look at it. Because that is going to be maybe the most important plan available, even if you decide not to supplement it with an individual policy. And let's look at it, because I don't want somebody to become an expert on how good or bad their disability insurance is if it's at the point of them needing it. I just got diagnosed with XYZ. Is what I have through work any good? You should know before that happens if it's good. And so where I've seen group policies, couple things about most employer-provided policies, especially with this audience. The benefits, if the employer is providing it to you, those benefits are taxable. So if you're getting a benefit from the insurance company and the premiums are paid by your employer, then you have to pay taxes on that. The amount of coverage that they provide you in terms of the benefit allocation typically is a relatively small percentage of your income. Some companies will insure like 60% of your income, but then if you're paying taxes on it, that's a much lower number. And then within that, they also put dollar caps. So if you're an anesthesiologist making, $400,000, $500,000 a year, and your employer provides a benefit of $5,000 per month, that is a fraction of what you take home every month. And I would so much rather walk somebody through what it is they have through work and then recognize whether or not it makes sense to supplement it. I will say that for most physicians, it makes sense. For, aside from getting a higher level of benefit, the upsides to having a private policy are that you lock in your rates based on your age. You get to take it with you. So whether you're in training and residency or fellowship, or you're practicing or whatever, if you buy a policy and you decide not only to change employers, but let's say you change states, that policy follows you. And this doesn't happen as much in medicine, although I have seen it happen. If you were to change occupations entirely or even specialties, like you decided that you wanted to shift away from anesthesiology to something else or from something else into anesthesiology, the policy morphs with you. So it protects you doing the occupation that you are doing at time of claim. You don't lock in the occupation when you buy the policy. It can shift with you.
Can you tell us some examples of claims that you've seen and how you helped clients navigate that?
Yes, and I'll go back to my days at Standard. As I mentioned, I was often the first phone call. I got a lot of what I would deem hypothetical questions related to claims, and lo and behold, they'd magically turn into claims. And I think with people just trying to dip their toe in the water around how the carrier would respond. And let me pause and say that disability insurance, and again, I think it's fair to be skeptical of insurance companies. The language used in their policies, individual policies, are much more consumer friendly than I think a lot of folks give credit to. And there's protections in place that are there. Yes, they're there to protect the insurance company, but if you really dive into it, there's a lot of language in policies that are designed to protect the consumer. In terms of claims that I've been involved with, and I've been involved with quite a few in my years, a few that come to mind delve into both physicians and dentists tend to be the number 1 and 2 buyers of disability insurance, which I think translates into the number 1 and 2 users of disability insurance when it comes to claims. Yes, I've had a lot of illness related claims. I've had situations, I had one a couple of years ago where I had a client, she called me and she said, I was just diagnosed with cancer. What do I do? And rightfully so, she was scared for reasons beyond disability insurance and what the benefits could do. But I let her know that, you bought this policy for the purposes of protecting your income. File a claim. And I encourage people, forget everything you know about home insurance and auto insurance when it comes to individual disability insurance. If you've had your policy for a couple of years and you file a claim, there is literally nothing the insurance company can do. They cannot cancel on you. They cannot single you out and raise your rates. The worst thing that can happen if you file a claim is they deem you not disabled. So specific to that individual, she filed a claim and she was not deemed disabled. And the reason for that was her cancer went into remission. That is a very good thing. Now, that same client, 6 months later, her cancer came back, and it came back much more aggressively, as cancer often does. And because she'd already started the process, she had a better understanding of what to expect. And similarly, the insurance company had already worked with her a little bit, so they kind of had an understanding of who she was seeing, her providers, and what the prognosis was. And so it was an easy process for both parties because she followed the advice just to file a claim because there's no risk in that. I have other claims. I have a dentist in Texas and a surgeon in Texas and a dentist in Idaho that are on partial claims. I think a lot of people think when they think of a disability, they think of a scenario where they're just not able to work at all. And that certainly happens, but there's also what are called residual claims or partial claims that there's allowances in the contract to pay for. So the surgeon in Texas, he is not able to do certain procedures, and he's worried quite a bit about patient safety, and so he has to refer those out. As a result, his income's gone down, and he gets a benefit to offset a portion of his lost earnings. Now, this dentist in Texas, this one's an interesting one. So he went on claim, filed his claim with the insurance company. He was dealing with lower back issues. Very common. He was able to see patients about 3 or 4 hours a day, and then his back was in such pain that he could no longer sit in the dental chair and he'd go home and rest. And this rinse repeat, this is what his life was. Not ideal, but he loved his practice. He loved seeing his patients, so he filed a claim. We said, it sounds to us like you are partially disabled. You have what's called a loss of time. File a claim. There's provisions in the policy that cover that. What was unique to his situation is he filed the claim and the insurance company said there is no doubt in their mind that he's disabled. And they were trying to pay him a claim. The mistake that this particular dentist made, he was a practice owner, was that he continued to pay himself as if he wasn't disabled. So he was effectively bleeding his practice dry so that he could keep paying himself. And it wasn't until we got word of this that we said, hey, you bought this policy to protect your income. Your income can't be protected if you can keep it where it was, knowing that the revenue coming into your business is lower. And so with him being the practice owner, magically his income went down the next day and he started receiving benefits, no problem. But it was one of those interesting ones where the insurance company was like, we want to pay you a claim, but you're not allowing us to do that because you keep paying yourself.
What kinds of verification is an insurance company looking for as you're walking one of your clients through the claims process?
So every claim typically starts with the claimant or the insured having something going on with their health. So the most important thing is to document it. As weird as that sounds, and physicians are very good at self-diagnosing. Going back to that surgeon in Texas, that was a situation where when I was first told about what was going on, my question was, have you talked to anybody about this? And the response was, no, I determined what's going on myself. I'm like, that's great that you did that, but there needs to be a record of you talking to a medical professional other than yourself so that we start the documentation process. In terms of your question, Justin, I think the reality is that the information the insurance company needs varies drastically from one claim to the next. And not to skirt the question, but if somebody's, for example, dealing with, a mental health claim, that can be much different than if somebody's dealing with a musculoskeletal claim in terms of the information that they need. Some claims are very obvious. If somebody is, let's go extreme. If somebody's in a coma or dealing with ALS or something, or Parkinson's, and the symptoms are, consistent with somebody who's dealing with that and they're not able to do their job, that is different than somebody, for example, who tries to go on claim for chronic fatigue, which is a very tricky claim for insurance companies to adjudicate because they are, and I'm not, chronic fatigue is certainly, it's a diagnosable issue, but it's hard for somebody who's saying they're tired to prove or disprove that. And those are claims that get paid, but they're more complicated ones. Or fibromyalgia is another good example where, somebody's experiencing pain that there's complications around proving. But ultimately, every claim typically starts with the insured reaching out to the insurance company, and then they will send out forms consistent with what they need to gather information around.
Are there other unique considerations around the mental nervous claims that insureds should be aware of?
It's definitely been something that the industry has both become more liberal in some respects and more conservative in others, and I'll try to explain that. So specific to anesthesiologists and pain management specialists, that is an occupation that for the most part, the insurance industry as a whole is very sensitive to when it comes to mental health, meaning that they would prefer not to issue a policy to an anesthesiologist that has unlimited coverage for mental health. They've run into issues with that in the past. And bundled in that can also be substance abuse, which historically anesthesiologists as an occupation have greater levels of than others. I'm trying to be diplomatic here. They've seen higher incidences of both mental health and substance abuse relative to maybe some other specialties, but I think there's also been some recognition within the specialty itself, so that's getting better attention. When it comes to the coverage, what's limited, it's worth noting that things like dementia or Alzheimer's, those aren't generally applied to a limitation. So somebody who's worried about that or has a family history of, let's say, early onset dementia or something like that, their policy, even if it contains an exclusion, typically will cover that long term. I guess I take some comfort in recognizing that companies historically that have a 2-year benefit period for mental health, most of those claims are short-lived. It's a life event. There's been a death, there's been a divorce, there's been something going on that triggers it. And if they have coverage for 2 years, by and large, they're able to get through that difficult time in life and return back to work. I think for me, and yes, I'm sure mental health claims represent a portion of claims insurance companies deal with. But for me, it's, even a policy that has an exclusion for a common, let's say somebody's got a policy exclusion for their lower back, that's common. It's a pre-existing condition. It's a function of, okay, well, we can recognize that we're not able to protect that part of your body, but we can protect everything else. And so I had a very fascinating individual I was working with a few years ago. This was someone who really wanted disability insurance. He really believed in it. He'd had a lot of experience with it, but he had a lot going on health-wise. And he was a dentist who worked, obviously with his hands, but his pre-existing conditions were such that he got a policy issued. We had to go to a secondary carrier called Lloyd's of London to get him a policy. His policy had an exclusion for his hands, his wrists, his elbow, no, not his elbow, his shoulder, his neck, and his back. He was more worried about getting coverage for cancer. And so I don't know if he's the luckiest or not luckiest. I tripped on his elbow because this particular dentist went snow skiing, crashed, broke his elbow. Like the one item, one joint from the waist up, not excluded, and was able to go on claim.
Are there any other common mistakes that you see as physicians are trying to get the right coverage in place for disability?
There's a few. I think, in terms of, I think the initial mistake is treating it like it's an all or nothing proposition. Like if we were having a life insurance conversation and we determined that it made sense for your financial plan to have, I don't know, let's say $5 million of life insurance, and you saw the price associated with that, then, and you're like, that's too expensive. Well, the easiest thing to do is to lower the benefit. Have it fit within your budget. And the same is very much true of disability insurance. There are certainly cooler things to spend your money on than disability insurance. I'm very cognizant of that as someone who spends his money on disability insurance. but I'd so much rather have somebody have a plan that fits within their budget, subscribing to the theory that some is better than nothing should you need it. And then when it comes to the plan designs, this is where I leverage technology a ton, is that if I'm working with an advisor, I'm working with a client, I'm building a quote on my screen so they can see firsthand what goes into a policy. What does checking this box do, not just to the policy, but to the price, so that you can make an informed decision. Because yes, you can, have the Cadillac of products and you can take comfort in knowing it's going to cover every which way scenario you can think of. But the practical reality is that's not always the best fit for people. So it's finding something that they're comfortable with. On average, getting down to it, if somebody says, what does disability insurance cost? The reality is it depends. And it depends on a whole host of factors. If somebody wants a really solid policy and they're an anesthesiologist, it can cost anywhere from 2% of what they make to 4% or more of what they make. And if somebody's making, let's say $400,000 a year, and you're telling them that it's going to be 4% of their income, that's 16 grand a year. That's a big number. And that's that car I was talking about for your teenager, right?
Yeah.
So then it's, let's scale it down so that you still have robust coverage, and you can sleep well at night knowing you're protected, but you're not, losing sleep because of how much you're spending. So I would say that's mistake number one. Mistake number two, claims happen, disabilities happen. It's much different to deal with a disability claim than it is a life insurance claim. When you're dealing with a life insurance claim, you're usually dealing with a loved one of the person who had the policy. With a disability claim, you're dealing with the person directly who had the policy for the most part. And, unless they're dealing with something so complicated, they need power of attorney or something. So the mistake I think a lot of people make is they wait to file a claim. They wait for it to be too bad. Maybe they're partially disabled now and it's a progressive illness like a Parkinson's or MS. And they're like, I wanted to wait to file a claim. And I'm like, you have provisions in your policy that protect you right now. File the claim. In fact, one of my very first meetings was with an individual who was only working 20 hours a week and making a couple $100,000 a year as a doctor. And I'm like, oh, this is the coolest thing ever. This guy's, he gets to work part-time and he's making enough money that he's able to live his life. And when we got down to it, I asked him, how is it that you're only able to work 20 hours a week? And he goes, oh, it's not that I'm choosing to do that. My back hurts. I can only work 20 hours a week. And I'm like, oh, you're disabled. And he didn't even think about it that way. I'm like, and he had a policy. I'm like, the agent brought me in to try to help him get more coverage. And I'm like, no, you have this provision in your policy right here that says that if you have a loss of time, you're entitled to benefits. And he'd been doing this for years. So the mistake was not asking the question. I think another mistake people have is that if they become disabled, they think they need to hire a lawyer. I would caution people, and I'm not out here to offer legal advice. This is my disclaimer, but I think people bring a lawyer into the equation more often than not, sooner than they need to. And disability lawyers can serve a great role through this process if there's a more complicated claim or extenuating circumstances. I want to make sure I'm promoting their value, but I think a lot of people have very cut and dry claims that if they bring the lawyer in too soon, can really affect what their benefit is. And thankfully, I've crossed paths with some attorneys over the years that recognize that and don't take on a case because they basically say, you don't need me. And I love that. I love that approach. There are certainly other scenarios where a lawyer is needed. But I think that's a common mistake. And then the other maybe biggest mistake I see is that people buy that policy when they're coming out of residency or fellowship. They buy that $5,000 per month or $7,500 per month or whatever number they get. And then they shelf it and they put it on the shelf. It collects dust, which is maybe good because they're not disabled, but they don't recognize that between, when they bought that policy and today, a lot's gone on in their life. They're now making substantially more. They maybe have gotten married. They've had kids. They've bought a house. They've incurred all these expenses that rely heavily on their income, and they've not maintained their benefit to help cover the cost of it. So I would encourage anybody listening, have a periodic conversation with advisor. Is what I have adequate for where I'm at in life? And the good news is there comes a point, thankfully, where I'm working with people that have gotten through their career, maybe haven't needed it. And I'm like, okay, either you can drop your policy because you're working because you want to, or you can scale it down. You bought this policy that was providing you a $15,000 a month benefit. And we bought that because at that time you had a young family and a mortgage. Your kids have now moved on. let's scale down your policy if you want, because you're still working a little bit because you have to. Or we can remove provisions from the policy. Like there's a provision on the policy called cost of living adjustment, and it's a great one. If you become disabled, every year that you're on claim, your benefits grow, which is wonderful. It's not cheap, but if you buy a policy at age 32 and you're working till you're 67, that's 35 years of potential benefit growth. But if you get to a place where let's say you're in your early 50s, that window of time you will have benefited from having your benefits grow is now smaller. Does it make sense to take that savings, remove it from the policy, and maybe invest it? Sure. So those, I would say, if you're working with somebody as an advisor that you're worried about every time I talk to them, they try to get me to spend money, you may want to look at a different advisor. And while that will be true in a lot of interactions, I think someone who's truly providing consultative feedback is looking for what's out in your best interest, even if that means spending less.
For any listeners who want to reach out to you, Brian, what's the best place for them to find you?
Email's probably best. My email is Brian, BRIAN, at incomepa.com. So income, P is in Paul, A is in Adam.com. Or they can go to incomeprotectionadvisors.com.
Brian, thank you very much for your time today. It's been a pleasure chatting with you.
Justin, appreciate it. Thanks so much. Thanks, everybody.
If you liked what you heard this week, head on over to apmsuccess.com, where you can find more content and free resources to help you build a successful career in anesthesia and pain management. If you wanted to leave a review in iTunes, I'd also really appreciate it. Thanks for using some of your valuable time to join me today on APM Success.